Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat, and along with me, Karanya Rao. Let's get a move on with the headlines, and we have an action-packed Monday morning as we begin the weekend trade. The market is seeing some wild oscillations. The media index leads the up move. However, the PSB and the Pharma indices are under pressure. So the Nifty Media has gained the most since 4th August, led by Sun TV. Autos rally over 2%, led by Hero Motor. And then IT gains more than 6th August. So we're seeing some big moves, but certain select pockets under pressure. Then moving down to a little bit of a commodity check for you. Gold has really also moved a lot. Let's say over the last weekend, we had Warren Buffett, Berkshire Hathaway coming in and picking up stake in Barac Gold, which is a gold mining operation. This is also reversing a historic stance that Berkshire Hathaway has had in gold, whereas if you go back to letters dated 2011 and 12, the head of that firm, Mr. Warren Buffett, is not too upbeat on gold as he is today. Then moving forward, we have a clarification from Tata. The management has dismissed reports on any plans that the company may have to sell JLR. They say JLR remains a key pillar of the group and JLR remains as strong as it was transitioning into new tech. So those seem to be some false rumors that were circulating. Then moving down to telecom and AGR, the next hearing is today at 3 p.m. So we'll have a lot of updates for you from there regarding how the telcos will be impacted, and of course those stocks will all be in focus: Vodafone, Bharti and Reliance. We then move on to fundraising. Over the weekend, we got notice that ICICI's QIP was successfully completed and they raised the 15,000 crores that they needed to raise. So that was also good, and it saw Marquee participation from Government of Singapore, GIC, really good list of investors coming in there. Finally, as far as the headlines go, before Karanya comes on for a market check, scrappage policy on the anvil possibly. The government and CM deadlock over incentives likely to end, say sources. The government may accept CM's offer of a 1% discount on new vehicles post-scrappage, and government focus on getting in the formal scrappage guidelines released in a few weeks. So those were the headlines for this morning, and over to Karanya now for a market check.
Right, markets, well, largely stable, just around the levels that they started picking up at. You have the benchmark Nifty, which is a tad bit lackluster, I would say. It's gaining just about 20 odd points. Sensex is also looking very quiet, trading just along the flat line at 37,895. Broader markets definitely outperforming the peers. The quantum of gains is also higher there. You have mid-cap gaining close to 0.3%. Small cap is gaining in the excess of 0.5%. Like Varun also flagged off, you have some very solid gains coming in from a lot of these media names in trade today, many of them belonging to the small and mid-cap indices. Nifty IT also looking quite resilient. It's up a good 1%. Nifty Realty is up 1.5%. Nifty Auto, solid pace you're witnessing on this particular basket as well today. Nifty Auto is up almost 2% in trade. As far as individual performers are concerned, the biggest gainer in trade is a Z Entertainment. Do remember the company will also be delivering their numbers this week. Ahead of that, we're seeing a solid run-up come by in this counter, 4.3% higher. Eicher Motors in top gear, biggest gainer on the Nifty Auto Index and the number 2 gainer on the Nifty 50 Index, up 4%. NTPC is also up 4%. You have Hero and Bajaj gaining in the excess of 3% each. Bajaj Auto, I meant. Wipro is also looking very upbeat, up close to 3%. M&M, Tech Mahindra, L&T, Adani Ports, all of them gaining close to 2% as we speak. From the broader markets, that's where the action lies today largely. You have Sun TV gaining very sharply after a good set of numbers delivered. Shriram City is also looking good, up almost 6%. Quest Corp, Imami, Escorts, ABFRL, Polycab, Torrent Power, Jindal Steel, Tata Communications also looking very strong. You have Godrej Industries, Dr. Lal, Adani Gas. These are the names which are buzzing big time from the broader end of the market. But let's get you the biggest market voice on the channel today. We had an exclusive chat with Mr. Raamdeo Agrawal. He tracked changes as market try to shed the COVID impact. He calls gold rally driven by fear of inflation. He says RIL will grow exponentially as it opens digital arm and mentions about changes in the HDFC helm. Here's a slice of that exclusive conversation. Listen in.
Gold has become in a zero interest rate, zero inflation environment. So not only the interest rate is zero, inflation is also zero. So in that environment, because earlier our thinking was that gold is a inflation hedge, but there's no inflation. So there is no logical, see there could be liquidity. I mean there is no other place to park the money. There is no bonds. So, but gold is not a yielding asset. And maybe there is a fear of inflation coming back, but that fear is going on for last 10 years. So I don't have any extra insight that fear inflation is imminent. I don't see anything else. I mean, there is no other reason why should gold go up. But maybe the wiser people like Buffett and all, they'll give, or maybe they're fearful of inflation coming back, which I don't have any clue. So I learned one thing from him. If you don't understand something, don't do it. So I would still stay in the on the side of not understanding gold. So I would rather stay away. That would be my way of saying it.
Fair point. Thank you for that honest answer. I have just one more question, which in a sense has been puzzling everyone, which is that you are in a market where equity, which represents risk and also productive gains, is at a record high, and gold, which represents a hedge and a fight against inflation, is also at an all-time high. It's rare that both these assets, Raamdeo ji, they rally together. How should a ordinary investor read into this trend? Because they both are very contradictory in nature, aren't they?
Yeah, I think both are being driven by very different forces. I would think that gold is driven, gold prices, bullishness in gold prices are driven by fear of inflation. There's no inflation. There's actually deflationary pressure, but there's a massive fear of inflation. I mean, you cannot fight with the fear. Fear of anything you cannot fight. So there is a fear of inflation, and there is no any evidence of inflation on the ground in the global markets. Whereas the equities are being driven by the fact that there is no yield in the bond side. Our bond is a 10-year paper is trading at say 60 basis point. So actually, effectively, the bond P is really 150. So what is the harm in buying equities? I mean, basket of equity, like I'm talking about indices at 20-25 P multiple, which also has growth and 2.5% dividend yield. So that's the argument for stocks against bond. So which is very logical so far, and liquidity is also there. So clearly, and because of that, if you see the performing part of the equities in the world, whether it is FANG companies.
All right, that was Raamdeo Agrawal, but let's switch gears a little bit. Nifty Auto has formed a golden crossover pattern, and Jayesh is standing by with the details of what this could imply. Over to you, Jayesh.
Well, the Nifty Auto has indeed made a golden crossover on its daily chart, which indicates further bullishness, because the golden crossover is formed when the 50-day moving average crosses above the 200-day moving average. So essentially, the shorter term moving average has in fact crossed above the 200-day or the longer term moving average. And also, if you have a look at the price action, that has been very interesting for the Nifty Auto. It has gained 9 weeks in a row and has been up about 17% during that time. Also, it has recovered more than 70% from its 52-week lows that it hit in March earlier this year, and it's up about 10% in the last 1 year and about 10% of its 52-week high in October 2019. Also during this period, if you have a look at the individual stocks, MRF is the only stock that has managed to give you negative return. As far as some of the outperformers are concerned, there is a stark standout performance that we have seen from the auto ancillary space, the likes of Bharat Forge as well as Motherson Sumi, the top 2 gainers on the Nifty Auto in the last 9 weeks. And then you have Bosch along with TVS Motors and M&M, which also complete the top 5 stocks that have given you more than 20% return during this period itself.
Okay, Jayesh, thanks much for that. Utkarsh is standing by with an exclusive update as well. The vehicle scrappage policy that's been awaiting final guidelines for almost a year may soon become a reality. Now, what we're picking up from our sources is that the deadlock between the government and CM for incentives is over. Sources tell us that despite initial reservations, the government is likely to accept CM's proposal on incentives to be offered to encourage scrappage. Utkarsh is here with all the details. Utkarsh, where exactly do we stand now? By when can we finally see a concrete announcement about the policy?
The deadlock between SIAM and the government seems to be over when it comes to incentives. Now, what I've been told by top sources in the Ministry of Road Transport and Highways is that they have reconciled. They're not very happy with the fact that only 1% as an incentive is being offered by SIAM, but they've said that it's a market-driven choice and it's their choice, and we will have to respect whatever they're giving. What they're not happy about is that in the initial days, SIAM was ready to give somewhere around 3 to 4% as a discount on a vehicle which is purchased after you have scrapped your own vehicle, but that has not happened. That due to COVID, SIAM revised its offer and took it to 1%. What I've been told by our sources is that now it's the time for the government. The talks between the Ministry of Road Transport and Highways and the Finance Ministry is already ongoing. The talks are about what will be the incentives which the government will give when it comes to getting a scrapped vehicle, getting a new vehicle after the scrapped vehicle. This was the talk which happened between SIAM and the government, that you first tell us what will you offer, and then we will also add in some benefits, some incentives for somebody to buy a new vehicle and scrap their own vehicle. I've been told that it is within a few weeks that the policy might come, but let me tell you, it's been said many a time, so let's wait till the policy comes out. I've been assured that all the consultation process, the wide consultation process which was necessary, is over, and it will be soon that the policy will take a formal shape and will be out soon. So let's hope for that. At least at this point of time, what we feel is that a long pending policy and a long pending deadlock over incentives, it seems to be over. Let's really wait and watch how things pan out from here. As I said, been promised that it will be out in a few weeks, but that promise has been made quite a lot of time and being broken. So let's keep a close eye on when does the policy come out.
All right, thanks for that, Utkarsh. That was really interesting. But let's bring on board our experts, Kunal Botra and Shaina Mukadam are with us. Good morning. Welcome to the show. Great to have you all. Kunal, come to you first. Something that just caught my eye. Jayesh was pointing out earlier that there's a golden crossover pattern now emerging for the Nifty Auto. So could you elaborate on that a little bit? And then aside from that, what else is looking good to you today?
So good morning, Varun. Yes, golden crossover is an important phenomena. So technically, I mean, the definition of golden crossover is when the 50-day moving average, on the daily charts, that is crosses above the 200 moving average, and that happens when the short-term trends for stocks as well as for the index in this case generally goes on to a much stronger upside, and the longer-term trends take its own time to try and reverse. So when you have the 50 DMA trying to break above the 200 moving averages, it generally results into some sort of an uptrend. So I think in that regards, that's the basic definition of golden crossover. How relevant that is? Of course, it's very, very important, very, very relevant to the current market scenario. It just about gives an emphasis or a stamp of approval yet again that the auto index is one of the stronger index or indices in last so many months, and we've seen that from their March lows, approximately many of these stocks have given you returns of somewhere close to 50% or 100% as well in some of the cases. So I think in that regards, it's a very important technical pattern. But then what the other thing which Jayesh also mentioned is that it has almost 9 weeks of unabated and consecutive price uptrend, and that I believe could probably result into some pull off into the stocks in that category. So I think one has to take it with a pinch of salt that maybe the long-term trend or the medium-term trend is improving for auto stocks, but because of this 9 weeks of consecutive price uptrend and in a market which is getting a bit wobbly, there is a strong possibility that many of these auto stocks could go through a correction.
Okay, great, Kunal. Thanks for giving us that overview. So you can look at auto, but beware, it has shown quite a lot of movement recently, and you have to be selective based on what Kunal just said. But Shaina, good morning. Let's bring you on board as well. What's catching your eye in the market this morning?
I think we are seeing some bit of profit booking, some bit of nervousness in some of the larger stocks, some news-driven movements. So I would take these opportunities as always to pick up stocks with a medium to longer term view. And one of the stocks that actually I would pick up for the day is Kaveri Seeds. They came up with very good numbers in the last weekend. There, I say the turnover growth of pretty healthy growth actually driven by new products. So new products actually now contribute almost about 23% versus let us say 15% in the last year. And their core business, which is cotton seeds, continues to do very well. So they're gaining market share. There, the valuation is also very attractive. 1 year forward is just about 10 times. So basically, I would use this time to actually pick up stocks which are which have got attractive valuation, good growth, and good fundamentals going forward for it. Simply because monsoons this year are good. So that would be one of the picks that I would go in for. This is the type of stories that I would like to go in for and buy at current times.
All right, Shaina. Thanks for your wealth creation bets. Talking about some more stock picks, Kunal, coming back to you. What are the stocks on your radar?
See, I'll go with a mixed trade because of the setup in the market, which is now getting into the vulnerable part. I would not say extremely weak or extremely strong, but now after Friday's correction, we are getting into this vulnerable zone on the indices. So hence, it's prudent enough to have mixed trades. So one buy and one sell. The first one is about Century Textile. Now, apparently, the stock still looks extremely strong. I think a week back approximately, the stock had a big price and volume breakout about the 320 mark. For the next 3-4 days, the stock had remained more subdued and sideways. But I still believe that candlestick pattern for Century Textile almost a week back should have a lasting impact. Hence, I would suggest a buy on the stock. Targets of 330 at least. Stoppers could be kept at 305. The second is a sell on Maruti, as I was explaining earlier, that many of these auto stocks have run up too swiftly and too fast in a very short span of time. And after 9 weeks or 10 weeks of such kind of a strong price action, you generally would expect that they should be trimming off of profits into these names. So I would go for a contrarian sell on Maruti at current levels, targets of 6,400 and stoppers at 6,800.
Okay, Kunal, thanks for that. Request you both to stay on with us. I'm just going across to break an exclusive story by my colleague Ruchi Bhatia. What we're picking up from our sources is that Agri Ministry, Niti Aayog and Commerce Ministry seek suggestions to make agrochemical sector Atmanirbhar. Ruchi is here. Let's bring her on board. Ruchi, how are they planning to increase self-reliance in the industry? What are the measures that one should expect?
Among the 20 sectors that the government has identified where they can push a little more self-reliance, push domestic industry, agrochemical sector is one of them. We're given to understand the Agriculture Ministry along with Niti Aayog and Commerce Ministry had sought the suggestions of the industry on how to make the agrochemical sector more Atmanirbhar. We're given to understand that the industry chambers along with the agrochemical companies have been asked to prepare a roadmap for becoming more self-reliant in the agrochemical space. We're given to understand that several meetings with the agrochemical sectors focused on tax breaks as well as more fiscal incentives to boost domestic manufacturing. Let me, in fact, tell our viewers what are some of the fiscal incentives that have been asked by the agrochemical industry from the government. They've asked that the registration cost for high-cost markets like US and Latin America should be borne by the government. They have sought for providing export input rebate of up to 15%, restoring the 200% weighted deduction for expenses on the research and development. They've also sought for lower GST on agrochemical space to either 5% or 0% in line with the kind of rates that are currently there for seeds as well as fertilizers. Besides that, they've also sought for lowering of corporate taxes significantly. In fact, they said that for the first few years, there should be complete exemption from paying corporate tax as well for new units, and for subsequent years, there should be exemption of up to 75% to 50% in terms of corporate taxes as well. They've also sought for regulatory reforms in the registration committee that is currently under the Insecticide Act. They've sought for review of price control under the Pesticide Management Act as well. And they've sought that various ways should be looked into to weed out any sort of substandard players that are currently there in the market, especially the Chinese players that are thronging the Indian markets quite a bit. Besides that, in terms of policy reforms, they have sought for plug-and-play industrial parks. Now, remember, plug-and-play industrial parks are industrial parks or industrial land that is given, or industrial clusters that are given to industry, wherein there is ready to use all sorts of clearances, whether environment clearance, pollution clearance. So any sort of clearances will not have to be sought by the industry. These are plug-and-play industrial lands wherein you can just go and start your manufacturing unit. Besides that, the industry has also sought for various ease of doing business reforms as well. They've sought a move to self-certification. They've sought for timely registration of new products as well as a process for ease of exports-related processes as well.
All right, great, Ruchi. Thanks for that. That was a very important announcement. The agrochemical sector in focus on the back of various reforms relating to GST reduction, tax exemptions, and improving the overall competitive landscape. So those stocks will be on focus, the likes of Dhanuka, UPL, Rallis. There's a whole host of agrochem stocks that are listed. Please do take a look at how they perform through the rest of the day. But with that being said, let's come back to Buy Now, Sell Now, and we have our queries that we need to address, beginning with RIL. And that's a query from Sohini Chatterjee, and she's bought 100 shares of RIL at around 17.50 per share. She's looking at things from a long-term view of 2 to 3 years. So Kunal, let's bring you up first. I know it's a heavily discussed stock, but is there any new insight you can provide, Sohini, from a 2 to 3 year perspective?
No, I think the view still remains the same. The stock has given breakout on long-term time frame charts. We've seen a leadership recovery. It's not just a one of the recoveries as such for RIL, but a leadership based recovery, and which is where the recovery in this stock has led to a recovery in the overall markets, as well as has given a boost to a variety of the other sectors and stocks as well. So I think that regards that this is one stock which I believe should continue to move up higher. You've bought at a very attractive price, I think 17.50 approximately. That I believe now is a very strong long-term support zone as well for Reliance Industries. So I think if your view is long-term, you should definitely hold on to it from a longer-term view. And in fact, if the stock apparently comes back to those kind of support territories, say around this 1800 mark, if it happens, if there is any sort of a correction over the next 1 or 3 months, then I believe that should be taken as a good buying zone for you to average further and then continue to hold on to it from a long-term view.
Okay, thanks for that, Kunal. Shaina, from a more fundamental perspective, Reliance has run up, a hell of a lot, for the lack of a better word. And there's been so much infusion of capital, but yet also now there's so much diversification. Today you're hearing about something with Urban Ladder that they're possibly looking at. So where do you peg this right now, given that Sohini has entered at 17.50? Is there considerable upside still to come, or do you think that we're going to be here for a little bit before the next bulk of growth really kicks in?
Varun, I think the stock is going to be where it is for some time now, because the rally has been, as you very rightly pointed out, very sharp. That is one. And secondly, the major rally has happened because of Jio, which actually give very good performance, even if we've seen in the last quarter, in terms of everything, subscriber addition, ARPUs improving, and also the fundraising. I think the fundraising and the partners that it tied up with, the strategic partners that it has a tie-up with, that is which actually has driven the rally. Having said that, I think if you have a 2 to 3 year view, that is great. You can continue holding. You're likely to see ups and downs. If you have a shorter term, slightly shorter, you want to book some profits in the shorter term, I think you could partially take, say, 50% off the table as of now, and then re-enter at slightly lower levels, maybe 1,800 as Kunal has pointed out. I agree it's a good support level and closer to the investors' buying price. I think Reliance has been pulled into the AGR issue. We are likely to see some more news, negative news, if at all, coming on that front, because I think the courts are now trying to pull in RIL with regard to the dues from RCOM. Now, I don't know whether that is justified or not. Maybe it is, maybe it's not, but then that's for the courts to say. So I would take a little bit of profits off the table and re-enter at lower levels. There are always corrections, and the stock has had a huge rally, so I think there would be some corrections.
Okay, so that is the word coming in on Reliance Industries. Moving on to query number 2. It's from Vinod Sharma. He wants to invest in Hindalco at the current market price. Kunal, the stock has more than doubled in the last 5-6 months. It's at a multi-month high as we speak at 187, 188 levels. Good time to enter, or should he wait for some dips to come by?
Current levels. So metal theme, metal in a sector rally which you're seeing right now, I for one believe is here to stay for a decent amount of time. I think it all depends on how the dollar index also pans out globally, and we've seen the weakness in dollar index in the last, I think, 2-3 months specifically, and which is why the metal stocks and the metal story has just about gained a lot of attention, a lot of focus. And I believe that if that continues to happen, you will see the metal stocks continue to move up higher. Now what you have to do is in terms of strategy, because you are buying at the higher end of the curve, there is an expectation that maybe the markets could go through a bit of volatility and maybe some bit of a downward drift. Then even these metal stocks would tend to correct. So I think it's just about a strategy of position sizing which you have to apply at current levels. Maybe buy 1/3 of your expected quantity which you're looking to buy. If there is any kind of a meaningful correction in stocks like Hindalco or JSP, etc., then you should look to chip into these stocks at key retracement points or key support levels. I think that's a better strategy rather than buying all out at current levels, and then if the market goes through a sudden kind of a pause or a correction, you are left with these stocks at higher prices.
Okay, so that's the verdict on Hindalco. Incidentally, will be joined by the management right after this break. The stock very much in focus. Thank you, Sharmila and Shahina and Kunal for joining us this morning. Taking a break here, Hindalco management on the other side.